All right, good afternoon, everybody. Good afternoon. I am an associate member of T3 Trading Group, which is an SEC registered broker-dealer and a member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure. So I'm no longer short QS. I got all out of that on Friday when I got to my target. I got almost all out of Joby also. I don't have any of the quantum shorts anymore. What else? I got out of my TQQQ long today and I actually flipped short. But I'm small. I'm small on that. I'm also really small on some AVGO short that I'm keeping. I think everything else is mostly the same. I still have a little bit of MSTR and IBIT long, but not much left. And I got trapped in some of this INHD, which was really dumb, to be completely honest. It was a silly mistake, but it's a 50-cent stock, so at this point I'm just kind of long versus zero, and I'll see if I can manage the position out of it a little bit, or if not, it can go bankrupt and I'll lose another 50 cents. So it's not the best way to trade, but it's kind of what's happening with that position. All right, so let's discuss. Strong day today for the market, right? SPY is up a solid 1.5% today. Qs are up 2.7. IWM is up 1.9. The TLT finished up 0.6. So interest rates were down. The dollar's flat. The dollar's still strong. It's still overall, I think, a headwind for this market a bit here. Crypto bounced back, but honestly, like I was saying earlier, well, it went during the day. Pre-market, I felt like it wasn't gapping up enough, but we got IBIT up 5.4% today, so really strong snapback in that IBIT. Again, I'm just renting these crypto longs. Ethereum back 8.3%. Solana up 9.25%. MSTR, which I'm long, was disappointing. I guess there was a negative piece out on it this morning. I'm disappointed to see that's only up 5.4%. I feel like it should be up double that. If you look at BNMR is up 19% off of Ethereum's 8%. So you're getting like a 2x premium on BMNR compared to what Ethereum is doing. I would have expected the same thing from MSTR today, but again, there was a negative piece out on it this morning. So MSTR is only up 5.5%, when Bitcoin itself is also up 5.5%. So a little disappointing, but still turning into a pretty good trade for me on this little crypto long that I put on at the end of last week to take advantage of some of the larger downside extension that we were looking at. Turning things over to the technicals, really strong day today. Obviously, strong uptrending day. Right at the open, we had an opening momentum move, even though we had already had a small gap. We corrected down to equilibrium across the board. We even called out the long versus this low here. I think we actually called out the short versus this high. We called out the long versus this low. We recognized the Q relative strength. It was the same thing. We called out the short versus this high, the long versus this low. I think I tried to call it a short versus this high. Obviously, that did not work. And then we were just looking at this bull flag to see if the bull flag could give continuation. And it did. From that point forward, the market turned into a full upside grind. And I was saying around 10:30 or so when we were making new highs that this is really confirming the question that we had in the beginning of the day, which is who's going to be in control of this market when you're looking at things on a little bit of a bigger picture. And we still don't have full confirmation on that. I still want to see Thursday get fully negated. If we can get above Thursday's high for the SPYs and the Qs, the IWM was able to do it today. That will fully confirm the bullishness of the upside on the market right now. So we still need to do that. But overall, really solid snapback from where we were like pre-market on Friday. And it circles back to kind of what we discussed in the morning meeting, which is if you're just purely looking at the technicals here, the technicals have gone into a moderate downtrend, lower highs and lower lows. Bigger picture, I would say that this S&P and the NASDAQ never actually got bearish. They got what I would call neutral bearish when they got below 660 on Thursday and stayed below 660 on Friday. They were kind of neutral bearish. Even with the snapback today, the bigger picture technicals I would consider to be neutral. But We don't want to just 100% purely look at technical analysis with charting. We also want to look at market dynamics, flow of funds, which I personally also consider to be technical analysis, because you're studying supply and demand. You're just studying supply and demand in a very, very different way when you're looking at flow of funds and market dynamics. And those, to me, are without a doubt overall bullish. We do still have some degree of CTA selling this week. We had an update on the CTA numbers from Goldman Sachs that got posted into the VTF somewhere earlier today. I'm scrolling up to see if I can find them, but they're pretty far away and I'm not seeing them. I'll give this about 10 more seconds. I must have scrolled right past it because I'm already back to 9:30 a.m. in the VTF now. So I'll scroll all the way back down and I'll see if I see it. And if I don't, then it just have to suffice for my memory. Oh, there it is. So from the CTA perspective, that's where the selling is still coming in. But in an up tape, and today was the beginnings of an up tape, it's $8.7 billion to sell. So it turns into, I guess it's a short week. Now that I think about it, though, it's a short week. It's only 3.5 day trading session this week, and there's lower liquidity. So that $8.7 billion to sell in an up tape is actually a little bit more impactful than it would be otherwise. It's a couple billion a day, but I still think a couple billion a day isn't really enough. I like to see these numbers to have a larger influence, be at least 5. And the flip side of the CTA selling today, thank you, Shoaib, for reposting that. The flip side of the CTA selling today was that we had vol control buying probably for most of the day. I think into a 2% up move, you would lose the vol control buying. So we were almost getting there with the SPYs. But vol control buying, CTA is selling, but the corporate buyback bid is fully on here, buying $6 to $8 billion worth of stock a day, and just the general bullishness of the end of the year. The market dynamics and flow of funds are absolutely bullish, whereas the market technicals are neutral. So kind of what I was saying in the morning meeting today is where we're set to open, right? We were opening kind of right into the ADMA on the daily chart this morning. Where we're set to open is a little bit tricky for new execution. It's a little bit tricky to have conviction for new execution, but I would probably rather be a buyer than a seller still. And I came into Monday today. I came through the weekend more net long actually than I've been in a while. So turned out to be pretty good from the position of my swings to be able to get continuation higher, and my T-Triple-Q, which I had a good amount of size long on, as well as the crypto longs I've got on, and the MP long, which MP got an upgrade this morning that I have on from last week as well. So overall not a bad day. At this point, circling back to the market, we are into the 21 EMA, that upper band of equilibrium here for SPYs or Qs. So there is still a chance that the bears can cause this to fail at this degree of an up move. And I still really want to see the SPYs get above 675 to confirm the bullishness. The IWM is doing it, which is interesting. The RSP is doing it too, but the RSP was also relatively weak on a percentage basis today. But the SPYs and Qs haven't fully cleared out yet. There is a chance that they chop around in this area. But if you look at the map of seasonality, we are just we hit a trough in seasonality at the end of last week, and it pretty much is up and to the right from here until the end of the year in a traditional year. So this year has been anything but traditional. So don't count the bears out fully. Let's see them recapture those levels. But so far so good. Things are looking pretty bullish. And again, outside of that, I just didn't have a lot for us in the morning meeting today in terms of ideas that I really liked. But Apple was able to give a good degree of continuation. Google is my favorite long. I was swinging this long over the weekend. I fully liquidated the position, and it really continued even after I got out of it. Big fan of this Google, but it's getting a little bit too extended to the upside to chase it. Amazon into the ADMA on the daily chart. Really hard one to buy today, but I was still long from end of last week. So if anybody was long with me, great spot to be booking some profit into the ADMA on the daily chart. Tesla ended up being one of the strongest stocks that's out there, still below 420. And speaking of Tesla, all the kind of crappy pre-revenue companies or overvalued companies had really strong days today, pretty much across the board. and that's what we expected, right? If you circle back to Pat's research note from this morning, I pointed out is it this chart? Yeah, this one. That the momentum trade has been completely washed at this point over the course of the last few weeks. So it's at the point, and I know that Scott Rubner is thinking this way too with his last note, that you're due for bigger bounces in these. So like RGTI, I was traditionally reshorting at 25. I'm going to be a little bit more patient on getting involved in that. I'm also trying to be a little bit more patient right now because I'm going on vacation last week in terms of just jumping right back into positions because I want to limit what I'm managing while I'm away. But strong bounce back from a lot of these pre-revenue companies and companies that are considered to be generally pretty expensive. Palantir actually wasn't that great, just back into the ADMA on the daily, but Tesla was pretty phenomenal. Nvidia was interesting because Nvidia was super relatively weak, while AVGO was extremely strong, broke out again through 360. It seems like that was off of a headline related to AVGO producing chips for Google. That's what we heard in the pre-market, and that might also be the reason why NVIDIA was relatively weak. But if you look at this NVIDIA chart, it still doesn't look good to me. It's nowhere near getting back to Thursday's high. It's not even getting above Friday's high, and actually could be a short versus Friday's high. I almost think you could have been like short NVIDIA, long AVGO as a pair trade today, just off the relative strength and relative weakness after that news. But at this point, AVGO is a little bit tricky to buy. So I think that's all I got. Happy to turn it over to you guys for any questions. I don't really have anything else to talk about. From Robert, can we go back to Friday QQQ chart? For you, Robert, anything? We can sure look at Friday's Q chart. We initially created an opening low, assuming you're meaning at 9:45. Yep. We initially created an opening low, which was taken out. Oh, taken out by the 9:45 candle. Okay, so you have you're looking really small time frame right in here, and then that got taken out. By reviewing tape from Friday, I see a majority of buying orders were executed as market orders. Would you agree with my thesis here? Why we couldn't hold that 9:45 candle low later on when majority of orders are executed as market orders. They create momentum chase, which we can also see from 9:45 candle formation, creating wicks from the bottom. However, those market orders are creating aggressive buyers, and they are taking liquidity. Away from market, so they are creating empty pockets at their buying levels, which is somewhere from lower prices than that candle. That's the reason why we still break more to the downside later on 10:30. The way that you're describing the orders going through the market and the results of those orders is honestly a thought process I've never heard before ever. So I've never looked at it that way, honestly, in my entire trading career. I understand what you're saying. I'm not fully sure I agree with the premise, but I would say that I don't really have any experience even thinking about the tape that way. The reason why I don't agree with the premise is, I'm just trying to think about... So the first thing you're saying here is that the majority of the buying orders are executed as market orders. One is I'm trying to figure out how you would know that. So obviously there's only two ways that you can buy. You can either take liquidity or provide liquidity, right? You can take the inside offer, or you can be bidding and have your bid get hit. So I would assume that whenever a market is moving higher, though, that the majority of buy orders are being executed on the ask side. Like almost as a rule, that has to be that way. Right? If the market is moving up, people are taking out offers, and then it's also getting bid up. But first you have to take out the offer in order for it to get bid up. So I would assume, and again, I'm just thinking out loud because I've never thought about this in the way that you're describing it. But I would assume into any up move that the majority of the orders are orders that are being executed on the offer. The majority of those buy orders, they're crossing. So that is one. Two is I don't necessarily think that creates a pocket of openness for the market on the downside if it comes back through those levels, any more than buying on the bid would if it then went up after that. And then if it goes below where those bids got executed, you could argue that it's kind of doing the exact same thing. Either way, you're putting people out of the money. And when you put people out of the money, they may be inclined to sell because they have to manage risk. So, Robert, I don't have a lot of strong feedback for you on this one. I'm really just trying to go through a thought process here, kind of live with you, because just to repeat myself again, I've never thought about it in the way that you're describing, and I'm just not sure that I am in agreement on the premise of how that would work. A majority of orders taken out on the offer means that they're all market orders, which therefore creates a pocket if those lows kind of break. I think that would act, I think that in theory it should act the same way regardless of how the initial buying was occurring. But I don't know, maybe there is someone out there that you've learned from that trades this way, and if they trade that way, maybe it'd be worth asking them, and if you can get more feedback on it, I'm always open to learning something new, but I don't fully follow the premise, just being completely honest. So I'm trying to think about anything else even to say about it. I kind of don't. I wish I could be more helpful, but I can be more helpful looking at the chart. So I don't like, the first thing I can tell you is that I don't like this opening low that you're describing as an opening low that breaks the 945 candle. I don't like that. I just don't like the area that it is in the chart compared to where we were trading kind of yesterday. It just seems to me like we had a very, very small gap up, right? But a gap up where it's so small that there is no extension from the gap. So it might as well basically be a flat open. So you basically have a flat open, very, very tiny up that's trading right within the range at the end of the day from Friday, that I just don't think you can derive anything from wanting to be like long off of a low in these first 15 minutes or short off of a high from these first 15 minutes. And even this little tail low, which from the 945 candle, I would probably consider that to be more the opening low, because it's more in kind of conjunction with Friday's low, even though that's not perfect also. And I honestly still don't love it. I just don't think it's clean enough compared to where we had been trading in that previous session. I think if you can take in the pre-market chart from Friday, and again, I know pre-market chart because the volume is lower means that these price point levels aren't as important necessarily, but I think that you want to be thinking about kind of a combination of Friday's actual day low, which happened near the close, and the pre-market low, because those lows are so much below Friday's low and are into really extreme extension on the daily chart, as the more major areas that you want to be paying attention to in the beginning of the day when the market's first opening up. And that pre-market low holds. And then on the intraday, the intraday low that we actually had on Friday was actually also, I think, pretty tricky. You had a little bit of downside extension coming in for this time of day at 10:35. And the only thing that would give me any conviction to buy here is that you're starting to really come into more extreme extension on the daily chart again. That would have me looking, for reasons almost to buy, gunning for reasons to buy. So, yeah, that's the best feedback I got for you. Sorry I can't be more help. From Varun, I know and you, Pat, covered Boeing and Meta at 3:30, but if you have time, cover them with the chart up. Sure. I don't know why you like Boeing so much. I hate the stock. I just don't think it's a good trading vehicle. The first thing that just stands out to me about Boeing as an aside note is it's incredible to me how bad Boeing trades, considering that every quote-unquote trade deal that we supposedly have gotten done with the trillions of dollars, $20 trillion in investment that's coming into the United States. Uh, the one thing that they always seem to throw in every country is, and we'll buy some Boeing airplanes. And yet, even with every country agreeing to, appease Trump by throwing in some extra purchases for Boeing airplanes, this stock sucks. It's really bad. It can't continue. The whole world wants to buy Boeing airplanes as part of trade deals, and the stock still can't go up. I mean, that's just to me, that's just terrible. And as another side note that has nothing to do with the chart, I've mentioned in the past, but I don't know about you guys. Every time I get on an airplane these days, I'm like, I really hope it's not a Boeing. I really hope it's an Airbus or an Embraer or whatever. I don't love getting on Boeings because they're the ones that seem like they're always falling apart in midair. But anyway, turning things back over to the chart, I don't like the chart either. I mean, it's super relatively weak. It's moderately extended. You had a little bit of a doji on Friday, as with the market. But look at the relative weakness today. Everything was up huge, and this thing was still dog shit. Can you get a snap back to the 80 MA on the daily chart? Yeah, probably. Probably at some point you're going to see this thing touch the 80 MA on the daily through price or through time. What happens if the market creates a high into this 21 EMA and then turns back down? So this is not a stock that I have any interest in being long based on either my qualitative fundamentals or the technicals. I want nothing to do with this, and it's a potential short versus 187.50, especially if you think that the market can help. Meta, I'm also not a fan of Meta, but I've been looking for this thing. I've been looking for this thing to give a stronger bounce back just because there's been so much extension from the 21 EMA. It finally did that. Finally broke above this 80 EMA, gave a stronger bounce back. I was long listing on a couple occasions for day trades. I never kept it overnight, but if I did have it overnight, if I was swinging it, I'd really be targeting into this 620 area, which is like the midpoint between the 8 and 21 EMA for profit taking. It could easily overshoot that, especially with market help, and give you a move up to the 21 EMA. The flip side is if you want to short this thing, which I'm going to be just very cautious on new shorts that are longer than day trades or like single day like swings, 1 or 2 day swings. I'm going to be really cautious in doing anything on the short side that's new, that's bigger than that. But if I wasn't so concerned about the bullish seasonality, I'd be looking at the 620 to 630 area to begin shorting the stock. Hope that helps. Seeing a question from Liam, but seeing a follow-up from Robert. So let me do the follow-up from Robert off of his last question, and then I'll go to Liam. I did not take the 945 candle as well. However, my second point is reason why we held that pre-market low is because in pre-market we can only limit orders. That's passive buyers. They're adding liquidity into the market, creating walls of support with real buy because money are added into the market at those levels. Yeah, but you can cross limit orders, and when you cross a limit order, that's the exact same thing as a market order. You can put a limit order at the inside offer or above the inside offer. It takes liquidity in the exact same way that a market order takes liquidity. So I'm not sure I agree with that premise either, because you can basically do the exact same thing regardless of the market time. You just can't actually execute a specific market order when the market itself isn't open. Over to Liam. I had a lot of swing longs from Friday low. Awesome. And I took it all off today. Great job. Was a really solid P&L day for me. Also on vacation, and like you were saying, we're not out of the woods yet. Was that a mistake to cash out everything because of a great P&L day versus trimming and leaving some on for further continuation? Have played this game before, having positions from good levels, trying to play for higher, and have given it back. So maybe some emotion from that. Just curious how you would feel about taking cash and running to hit salary goals versus playing the bigger picture, trying to blend day trades from good spots into swings, which has been working, but I guess I struggle on the out. Sure. So, the first thing I would say is, and this, I don't want this to be a cop-out answer, but it is the answer. I think that some degree of whether you got all out of your swings or not should depend on the game plan that you had going into the trade. Like, I know for me that my QQQ long was meant to be a trade for a snapback to this equilibrium zone, and I held it all the way to the upper band of equilibrium. I held it, all the way to just about the 21 EMA. I got out relatively near highs on the trade, and I'm not upset. I won't be upset that I got all out, even if the Qs go to 630 or make new all-time highs on the year, which is a possibility, because my game plan was very specific to the type of trade that I was taking. I had large downside extension in the market. I wanted to come in and buy it. I don't want to overly own it, but I want to take advantage of that extension, and that's what I was able to do. And I followed my game plan on my Q trade perfectly, and I'm very happy with it regardless of the result. And a couple of these ones that I'm even still in, this IBIT, I'm really just looking for a move to the 80 EMA on the daily chart, and that's my game plan. I might get out at the 80 EMA on the daily chart, and then Bitcoin makes a new all-time high. I'm not going to be upset because this is the specifics of the trade that I took and the game plan that I fostered for this trade. So that would be the first thing I would say. The second thing that I would say, though, is I tend to err on the side of being greedy when I have my risk covered on trades. So for whatever reason you're having to make a decision on fully liquidating these positions or getting out of them, I'm probably not going to fully liquidate them. I'm probably going to keep them, look to trail them, and look to get more out of them. I don't mind giving back open P&L to potentially make more money. I do mind, taking the absolute outright losses. But I do not mind giving back open P&L. I think that everyone needs to learn to become comfortable with giving back open P&L, especially if they've already booked more than 50% of their position. Risk is more than covered. They're going to make money on the trade, no matter what. With that said, we want to have our game plans in place based on certain factors. Is what I'm looking at trending? Is what I'm looking at range bound? What's the environment? What are the market dynamics? And those factors, I think, should influence the degree of greed that you're utilizing on the actual game plan that you put together to begin with. And, if you're long stuff from Friday's low, I think you should definitely be booking a lot of profit into the equilibrium area. But if you wanted to keep some for the end of the year seasonality, I think that's a good idea also. So I think a little bit of both would have been the ideal thing to do. From Mustafa, should I be looking at pre-market lows if they held and gave us a considerable bounce back up? They might hold again in the regular market hours, even if it's another day. Given that it wasn't just a bounce based on because of an oversold condition. Sure, so a couple things on that. First of all, in most stocks, pre-market lows have absolutely zero meaning because most stocks are trading with very, very little liquidity pre-market. So if you're looking at pre-market levels, pre-market lows, pre-market highs, you got to make sure that it's something that trades. If you're looking at the indexes, if you're looking at Mag 7 stocks, those names, it may make sense to pay attention to those levels. And even with those, more liquid instruments, I think that those pre-market and post-market levels most of the time honestly still don't matter very much. They can matter a little bit if there was an important economic number and we're paying attention to that starting 830 point like you hear me talk about a lot. It can matter a lot in more extreme situations, which is what we had on Friday. On Friday, the pre-market lows, we had extreme downside extension. So the fact that the absolute low was established in the pre-market at that extreme downside extension, I do think garners a little bit more significance than it would otherwise. And we can probably still note that pre-market low from Friday even a little bit going forward. But for the most part, the vast majority of the time, those pre- and post-market lows are not going to even matter even that day, let alone by the next day. From Kevin, hello, I'm new to T3 and the VTF. Well, welcome, Kevin. I'm an Elliott Wave trader. What do you think about trading ABC zigzags and Elliott Wave patterns generally? Thoughts on the 11.6 low in FCX? November 6th low on FCX. The price action following that low resulted in a double failure swing low to me. Is it a bear trap? Any thoughts? Sure. So I have never traded using Elliott waves. It's something where I like I know what it is generally, but it's not something I'm an expert in, and it's not something that I've ever used. My thought process on trading using Elliott wave theory, or honestly trading using any technical indicator that anyone might ask me about, whether I use it or not. Um, I think that all of those have a degree of value if they're used properly and not overly leaned upon. I view Elliott wave theory or Fibonacci retracements as another one that is probably more akin to an Elliott wave theory than like maybe just looking at like an RSI or a MACD. But the bottom line is that I view all of that stuff, if you choose to use them, as layers of probability for other pieces of information. I'll never make decisions purely based on any indicator or Elliott wave or fibs. I never make trading decisions on those things. But if I have another reason that's more based on technical price action, and then that is being confirmed by an RSI or a fib or something like that, it acts as an additional layer of probability that makes me like what I'm already seeing even more. So I think that you're new here to the team. You're going to find that we've got a lot of different traders here on the team, implementing a lot of different thought processes, strategies, indicators, and even different products. And probably a lot of the traders in the team, their approach rhymes with the way that I trade, because I'm kind of the main person, if you will, who's running a lot of the show. But rhymes, doesn't mean it's the exact same, and a lot of guys here are actually very, very different than me. You can even look at Pat, who is my main man. When you look at his morning note that he publishes every day, I don't know if it's still got are the Ichimoto clouds still in the note, Pat? Did you not get that in the technical report in there today, and I just didn't even notice it? Busy morning. It happens to the best of us. Let me try to see the last time you got a technical portion in there. It's 2 days ago? There it is. Do we got the clouds in there, or are the clouds gone? I'm not seeing the Ichimoto clouds anymore, but he still uses much stuff that I don't use. He's got some different moving averages than I use. He's got the Bollinger Bands in here, which I don't use. But you better believe that, like I remember back here in late October, I was viewing market extension in the way that I view market extension, and especially on the day 3, which is the all-time high for the market, was the day that I was really starting to be like, all right, day 3 to the upside of extreme extension, and it was being further corroborated by the Bollinger Bands per Pat's note. So again, that's not something I'm ever going to have on my charts, but it's an extra layer of probability that was helping to confirm my thought process to begin looking short there, even independently prior to seeing that note. And then that just becomes an additional layer of probability, additional piece of information that helps strengthen the thought process. If you want my analysis on FCX, the way that I would view it is that this is just a slow range-bound stock that is in the mid portion of a range that's within a range. You could argue that this is a large wedge, and of that large wedge, broadly speaking, you've got $39 support, $42 resistance. I don't necessarily view like a tick below or a tick above as a bull trap or a bear trap, even though obviously to some degree it acts that way because there's always going to be people getting stopped out. It was certainly more interesting when you see a higher volume candle like the one that you're referring to, where it closes on lows. So that's probably forcing out some additional people more than just like a wick below like you see on some of these other circumstances. But for me, it's a pretty straightforward chart. It's a little bit boring. You got a big wedge, 42 resistance, 39 support. I would wait to see which one breaks and potentially look to buy the break of 42 or short the break of 39. So hope that helps. From Liam, that was likewise the idea, but would not be surprised if that was the low into the... Yeah, I wouldn't be surprised if Friday is the low for the end of the year either, but I'm not fully sold either until, like I was saying before, we see the market kind of break above some of those technical levels a little bit more. Apex Joy in the YouTube is asking me my thoughts on Micron. Micron, great snapback today. Similar but different to what I'm seeing with a lot of names right now, where it's a phenomenal snapback, but it hasn't fully negated Thursday. I really want to see like a Micron get above and hold above 230 in order to give me more conviction that the bullishness is back on. And even at that point, it doesn't mean that I'm buying it, right? I still need a setup. I can look at a chart and I go, oh, this chart looks bullish, but not have a setup, and therefore I don't want to trade it. But as a starting point, I think it needs to get above 230 to even begin to build out a setup that I would want to buy. So that would be the first thing I would say about that. They've got earnings on December 17th, so it's good to know. That's still pretty far away. So we got plenty of time before the Micron earnings hits to, I think it's still tradable now. It's not like it's reporting tomorrow, so you can still trade it. And, we can reassess what the technicals of the chart look like when we get a little bit closer to the earnings report and obviously after it. For the most part, though, we've seen these companies come out and report good earnings but not trade well on them. So we'll see if Micron does the same. Liam asking me about AVGO. AVGO is a really, really solid day one to the upside. The degree of continuation is going to depend on the market, but this was the leader today. This was the biggest, best leader out of all of them. It seemed like they rotated money out of NVIDIA into AVGO. It looks great. Similar to what I was just saying on Micron, just because it looks great and it looks super bullish doesn't mean that I can just buy it here. We briefly mentioned AVGO in the morning meeting. I didn't realize it was going to be this strong, or I would have made it a stronger name for the watch list. But 360 is a hugely important level for it, but it's $20 above it. So you're going to buy 380 and give it to 360? I'm not. It's too much space. But it does look like it probably will continue. But let's see if we can get a setup. Let's see if we can get an inside day. Let's see if we can get a bull flag. Let's see how the bull narrative builds out on AVGO here, and we'll take it from there. All right, guys, it looks like I got through everything, so I will leave it at that. Have a wonderful night, and I will see you all tomorrow.